Okay, we're going to do the next section, section 3, verification of accounting record. And this is the chapter 2, correction of the error. And in this chapter, we have to learn how to prepare the journal entry to adjust the error and explain how we use the suspend account to balance off the trial balance, adjust the profit and loss after we have done the adjustment, and then know the effect of the adjustment on the statement of financial position. Discovering an error and adjustment. How are we going to discover the error? One of the easier way to discover the error is through the trial balance. If the trial balance imbalance, means that there is an error in the account. So, but however, sometime in a trial balance, the trial balance will still balance. So therefore, we cannot detect it. So because some of the error which is not affecting the trial balance, which is you learn in the trial balance topic that 6 error that not affecting the trial balance. So there are 6 error. The term, this is a term that you must remember because in the exam, they will ask about the term. So what is a commission, error of commission? Compensating, complete reversal, omission, original entry, and principal. So this is the 6 error that we need to learn later. Other error do not affecting balance of a trial balance. If a trial balance fail to balance, if the error affecting the trial balance, then we have to use suspend account to balance off while we find the error. This is a 6 error which do not affect the trial balance. First, commission. Error of commission. What is an error of commission? Error of commission is a transaction is entered using the correct amount and on the correct side. So the key, correct amount on the correct side, but in the wrong account of the same class. Example, cash received from Malini credited to Malika. Malini and Malika are the same class. Same class means that both are trade receivable. But we go and put into the wrong account because these two are different customers. Complete reversal. Complete reversal is the correct amount is entered in the correct account. Amount correct, account also correct. Debit credit account also correct. But we put into the wrong side of the each account. For example, cash drawing debited to the cash account and credited to the drawing account. By right, when we cash drawing, we should debit drawing and credit cash. But we make a mistake. We go and debit cash and credited drawing. So this is a wrong. By right should be debit, drawing, and credit the cash. That is called complete reversal. Omission. A transaction has been completely omitted from the accounting record. Neither a debit entry nor a credit entry has been made. Totally forgot. Totally, completely omitted means totally forgot to do the recording. No debit, no credit. For example, payment of wages not entered in the book. Original entry. An incorrect figure is used when a transaction is first entered in the accounting record. The double entry will therefore use the incorrect figure. First recording means book of prime entry. Book of prime entries, when we started, already make a mistake. So that caused both accounts also make a mistake. Example, goods 100 bought on credit but recorded as 1,000. So this is overstated on the purchases and also the overstated on the trade payable. Principle. A transaction is entered using the correct amount and on the correct side. This is correct amount and also correct side, but in the wrong class. So be careful with this one because most of the time we get confused. Here, this is a commission error. This is called principal error. Commission is a wrong account in the same class. Principal is a wrong account, wrong class. Wrong class means that expenses become the non-current asset, or non-current asset become the expenses, or expenses become the cost of sales, or expenses become or any other section that's in the same debit amount or credit amount. For example, in here, motor expenses debited to the motor vehicle. Motor vehicle is a non-current asset. Motor expenses is expenses account. So this is a wrong class. Compensating. Compensating means that two or more error may happen in the book. Mean it cause the effect becomes zero. For example, purchase account under added by 100 and sales return account over added by 100. So both also in the debit side, 1 over 1 under. So cause the different effect zero. Why we need to open the suspend account? When there is the half of the transaction has been posted, we forgot to debit, maybe we forgot to credit side. For example, the payment of wages have been entered as a credit in a book, in a bank account, but no entry has been made on the debit side. So debit forgotten. So we have to use the suspend account to make the trial balance. So in the general journal, we will debit wages and we will credit suspend because account for bank is correct. So we cannot touch the bank account. We need to go through the suspend account to put in the wages amount. Next is when both entry has been made on the same side of the two separate account. Both side also debited or both side also credited. For example, when the payment of wages has been credited to the both bank account and the wages account. So bank account is correct, but wages account is wrong. So we have to use the entry to adjust it. Okay, next. Others. When the entry has been made on the correct side of the account, but the figure differ, means that the one debit amount different with the other side. For example, the payment of wages has been correctly entered in the bank account as a credit of 230. However, the debit wages account is 320. Assuming this one is correct, so bank account is correct. So bank account correct enter. So wages account is the one make the wrong entry. So we have to reverse out the wages. So in this situation, this time for this entry, we have to debit, suspend, and credit wages because wages is overstated. So we we have to reduce the wages amount. When we have a trial balance imbalance, sometimes in the question will ask us to prepare the trial balance, and the general rule for the trial balance, I hope still remember. So what is the key about the trial balance? The debit side, what is the item in the debit side? Asset, expenses, drawing, cost of sales, and sales return. So this is a general idea about what are the items normally in the debit and what are the items normally in the credit. Liability, capital, revenue, income, and purchases, return, and one more provision that you're going to learn in future. This is a type of the account or the section of the account that should be debit or credit. For example, office feature is an asset, so cost is in the debit side. But when we have a provision, the provision will be in the credit because provision, even though both also asset, but provision reduce the cost. Trade payable is a supplier. Trade payable is a supplier. Supplier is a liability. General expenses is a prepaid. Prepaid means that we pay in advance. So this is also asset because expenses we pay in advance is belong to us, the money. Trade receivable is a customer. Inventory is a goods. Bank overdraft, it means that we do not have money in the bank. Bank given us the money. So we owing money to the bank. Capital must be in the credit side. So the differences will use the suspend to balance it off. So take note, trial balance, the subtotal debit credit must be the same amount and the same rule. How we use the general journal to do the correction of the account. For example, if we have the adjustment for debit purchases, credit suspend account, and here debit suspend, credit discount received, debit rent, credit suspend, and this another error happened. Office feature, credit general expenses. When we want to open the suspend account, if the question asks us to open the suspend account, take note that only the transaction related, which is appear the suspend, then only we transfer to the suspend account. The first suspend adjustment is in the credit side. So we were going to put into the credit side and the detail is opposite of the account. Second suspend adjustment is in the debit side. So here we will have a debit and the detail also opposite of it. Third one, suspend is in the credit side. So we will put into the credit side. The detail is opposite. So from here, when we get the suspend account balance off, that means by right, our account should be no problem already because debit, credit, same amount. So this one is the beginning question. If the question is not balanced, then we will have the balance worked out amount. Balance worked out can be in the credit side, depending on which amount in the trial balance is short. In this situation, this side is a debit less than the credit. So that's why our suspend account is in the debit balance. Okay, next. Some in the question, exam question, they will ask us to prepare the corrected profit after we prepare the error. the adjustment of the error. First, start with the profit for the year as per draft. From the income statement, you will get it, or the profit for the year, drafted profit for the year. This is not really the debit and credit. This one should be ignore it, just ignore it. This is not debit and credit, meaning it just basically is a should be increase or decrease. Okay. When the expenses adjusted in the general journal is in the debit side. Okay, I think this one. Okay. Let me adjust it. In decrease in expenses. When expenses decrease, profit should be increased. So here should be increased because credit for the profit is an increase. Okay. And then debit is in the profit point of view, we call decrease. This is from the profit point of view. Okay. If the adjustment, I'm saying if the adjustment appear in the debit side, then profit will decrease. For this case, decrease in expenses. Expenses decrease, profit increase. So credit side is increased. Increase in expenses. Expenses increase, profit will decrease. Decrease in income. Income decrease, profit will decrease. Increase in income, profit will increase. Increase in sales, profit will increase. Increase in discount received or other income, it will increase the profit. Reduction in other receivable, for example, rent receivable. Rent receivable means that we have a shop to rent out. People pay, tenant pay us the rental. This is our income. This is actually is an income. Okay. But rent payable, this is the expenses we pay. We have to pay people the rent. So when you have reduction in the rent receivable, reduce in the income, profit will reduce. Increase in other payable, which is the rent payable, for example. This one, expenses increase, profit will decrease. So at the end, we will add the subtotal, debit and credit column on in decrease or increase column. So this is more appropriate using the decrease or increase column. So add this, add the subtotal, find the differences, and put into the net here. The net can be plus, can be, we will get, if your y decrease more than the x increase, decrease more than, that means we're going to reduce the profit. So profit before adjustment minus the all the adjustment here, then we will get lesser profit. But if our y here decrease is less than the increase, the x, okay, the x. This one more, this one less. We will expect it, we will plus, so positive. So take the before plus the adjustment, get the final profit for the amount. Okay. In the exam, just take notes. Most of the time, this area will be gray. So you don't go and put in the amount. So this area not supposed to write. Your adjustment increase, decrease should be right under this column. Okay, so take note for that. Statement of financial position after the correction of the account. This is one of the questions that I did. And here this have the adjustment made whereby Moti has now made the following discovery. Depreciation for the year has been incorrect calculated. It should have been 30,000 rather than 40,000. Means that this amount should be 30,000, not 40,000. So we have to make adjustment. So how we get this adjustment? We take 120,000 minus 40,000. So we left with 80. After that, plus 30,000. So we get amount 11,000. 11,000. 100, sorry, 110,000. So we get 110,000 for the accumulated depreciation. So we need to revise the net book value. Take the cost, this one, take the cost minus the accumulated depreciation. So take this amount minus this, we get the net book value. The current asset, the presentation of the section is fixed. Non-current asset started, current asset, after that capital. If you have non-current liability, should be put into here, but this question don't have non-current liability, only have current liability. Current asset inventory. So here inventory, they say that some expenses has been prepaid 4,000, but this has been entire overlooked. Okay, this first of all, here we have the here still got the adjustment, which is that no space, so that's why I put like this. So this adjustment, we adjust the inventory. The inventory initially is 33,000, but here 31,000. If it now appear that some item in the store room were damaged, the word damage means that our inventory no value. So how much that the amount? 2,000. So we have to take 33,000 minus 31,000. Sorry, 33,000 minus 2,000 to get 31,000. Trade receivable no change, so we don't need to do anything. Okay, bank they also didn't mention anything, so we don't do anything. So now trial balance of the drawing account has been incorrect calculated. It should be 26,000. So this drawing account is not 31,000. It should be 26,000. So here they have suspend. So we notice there's 4 items, 1, 2, 3, 4 that have been adjusted. The rest no adjustment. So how we calculate the profit from the statement of financial position? Before adjustment, we have 53,000. This adjustment about the double entry, we should debit provision credit income statement. So this credit income statement reduced 10,000. So profit should be increased 10,000. Okay, and some expenses has been prepaid by 4,000. So this prepaid 4,000, we should adjust. We should, for this entry, we should debit other receivable and credit expenses. When we credit expenses, profit will increase because expenses decrease. So my profit will increase 4,000. And this 4,000 we are putting into here. Prepaid 4,000, putting into here. But profit of effect, this one is go to the current asset. Okay, this one go to the profit for the year adjustment. This one 2,000 profit will reduce because this is a closing inventory. Okay, just to talk about closing inventory. Closing inventory decrease, profit will decrease. Okay, so this one we have to minus 2,000. And the trial balance drawing, okay, so calculate the amount. 53 plus 10 plus 4,000 minus 2 which is we get 65,000. Okay, so this is about the effect of the financial statement. If the question asks you straight away to revise the statement of financial position, so that we need to take note how to put in all the adjustment and which account is affecting the profit. For example, this account affecting the profit, so we adjust it. And account not affecting, we don't want to touch it. So this for the statement of financial position adjustment. Okay. For you're currently in the intermediate section 3 and 4. So we still have more to go. I'm going to do more recording for it.